Coming up, we had a big miss in GDP stats this morning. We've got some interesting signs of a risk-on market starting. Stocks are higher, gold is lower, dollar is back down to fresh lows, and we had a great print this morning on the unemployment claims number, showing a little bit less than expected when it comes to weekly unemployment claims. This is a welcome statistic in the labor market. All I ask as we get started is make sure to hit the thumbs up button and subscribe to the channel if you're new for more daily market coverage. Let's jump in. Yesterday, for the first time in multiple months, we had the NASDAQ make its way back to the all-time trading high, which the recovery here, by the way, guys, if we go from the previous all-time high until the new one, it really only took a round trip of 127 days, which considering we practically went into a bear market, we didn't quite technically get to a bear market status. This was the perfect example of a very sharp but V-shaped recovery in the stock market in recent history. I mean, this was a move overall on the NASDAQ, a move down by about 26% at the lows, all the way back up to break even in 126 days. It's just a couple months. That's absolutely crazy to see such a quick recovery. The S&P 500 is also back to its all-time highs, although not putting in yet a fresh one, but very close to it. We're just at this point, an arbitrary amount away, about 0.4% from a fresh all-time high. However, we have the Dow Jones and the Russell still a good bit of a way from its all-time high. Still moving with some nice momentum to the upside, but still, Dow Jones, if we take a look at this one, about 4% from fresh highs. Here's an update on my DAX position, still about break even on this trade, but I do think this has upside. And when it comes to the Russell position, I'm looking for a breakout here to trail stops further into profits if we can get that kind of move. I've got a stop loss already trailed into profit, but would be looking to trail it further if we can get a solid breakout. And we've seen a severe crush in volatility here. Of course, with the April stuff, we saw the VIX go absolutely parabolic and have since really watched in this continue to grind lower as volatility in markets has continued to climb, now sitting at 16.5. This is a relatively low VIX now. And what this chart is signaling to you is that the market expects not a huge amount of movement ahead of it. Over here, the market was expecting a ton of movement. Over here, it's expecting a lot less, specifically the S&P 500, but this extrapolates into most markets. And so getting back to this unemployment claims data here this morning, this was definitely a welcome statistic. You can see if we zoom in here, we had the unemployment claims come in at 236,000 jobless claims compared to the forecast of 244,000. And this number has recently been moving higher. You can see the blue bars rising over time. And so a cooling off in that number is definitely welcomed because this number, as more people file for unemployment, makes people a little bit nervous about the labor market. So a cooling in that data point is the opposite effect. It's a welcome statistic to see labor data holding up okay. However, not so great today was the GDP growth statistics that we got. The final GDP came in at minus 0.5%, which was well below its forecasted of minus 0.2%, showing there is some contraction happening in the economy at this time. And today we got more commentary from Fed officials. We've got Fed's Daly saying a rate cut in the fall could be appropriate. And I think that's how you say that name, but I'm not 100% sure. And we can see the government bond 10-year treasury yield is moving lower here today, continuing to trend downwards. And I think this is a really interesting chart to keep an eye on in tandem with the US dollar, which is breaking to fresh lows for 2025 and has been probably the biggest loser in terms of major markets. Just from a secular standpoint, this thing has just been getting killed here recently. The dollar index continues to trend lower and breaking through yet again another key level of support off of this soft GDP statistics and rising expectations that a rate cut is coming from the Fed. Speaking of rate cuts coming, check out this. For the 30th of July, we've seen this tick up to a 27% chance that we are now going to potentially see a rate cut in July. With the GDP stats coming in soft like this, it's no question why this number is rising and has been rising for the last few days and weeks. And if you've been on the channel recently watching my videos, you know that I've kind of been pointing towards I think rate cuts are more likely to happen more so than people think rather than less so. While Powell is still very much on the hawkish side, more and more of the Fed committee members seem to be moving in the direction of, hey, it seems right to cut rates soon. While the probability is still expected that we do see interest rates hold steady in the upcoming July meeting, a rising percentage seem to think that we are going to get rate cuts in July. And what this tells us is that we're very, very confidently going to see a rate cut, only a 9% chance that we don't see a rate cut in the September meeting to follow. And now what we can see going out to the December meeting is that very likely we are going to get at least one rate cut. This is one rate cut, this is two, and this is three. So overall, we do see the probability for 2 to 3 rate cuts kind of becoming the norm. And gold continues to range here. And while we do have expectations of rate cuts, which are a bullish pressure on gold, we do see resolutions happening in the Middle East. And we do also seem like we're going to get some good developments on the tariff side of things, both of which are negative catalysts for gold. So I think it makes sense why gold has been mostly range bound. I personally think that there could be some upside for gold. If we tap into this 3,300 level, I may be looking to get long. And I also like the 3,120 level if we do see a larger pullback to possibly get long there as well. The trajectory for gold has been very strong this year. We'll see if we can get a second half rally or if this rather just kind of goes sideways for the rest of this year. Like I said, I think the risk reward becomes more attractive at these levels that I just mentioned, 3,300 and 3,120. Softening GDP statistics definitely favor gold, but unemployment claims doing okay is a negative thing for gold. Remember, gold likes chaos and uncertainty and economic woes. Another chart of the day is the Bitcoin to gold ratio. Check this out. The Bitcoin to gold ratio, when it is trending higher, tells us that we're doing some really high level math here, but basically the price of Bitcoin divided by gold, when it's moving higher over time, when plotted on a timeline here, we call that sort of a more risk on environment. And when it's moving lower over time, we call that more of a risk off environment. Essentially, people favoring gold and risk off and people favoring Bitcoin and risk on. So right now we see something interesting. We see a little bit of a breakout happening in favor of the risk on dynamic as people maybe like Bitcoin a little bit more than they like gold recently. By the way, the Edge Finder this week is free to use, and we have a link in the description down below. It is really quick to get access. All you have to do to get free access to the tool until Monday is use the first link in the description down below. If you use that link, just fill out the form. Takes a second or two to just answer, what your favorite market to trade is, things like that. And then once you fill that out, we'll email you a link right away within the next minute or two. You could be playing around with the Edge Finder on your own end and see if you like it. Now, if you like it, consider purchasing a copy of the tool at the end of the week. But if you decide you don't want to purchase it, at least you got the chance to try it out, and we'd love to hear some feedback from you as it really helps our team to continuously improve our tools for our customers. Another chart here that's not on the Edge Finder, it's actually on the stock box, which is the little brother or little sister to the Edge Finder, but built for stocks, still very much in development on our team, is a very interesting sentiment tool that I really like looking at myself, which is the consumer discretionary stocks versus consumer staple stocks ratio. Now, what are these two things? Now, consumer discretionary are stocks like Nike, stocks like Tesla, stocks like Amazon that offer a general fleet of products that are more wants, right? So we have our wants stock list over here versus our needs. Now, needs are like food, water, things that people need. Needs stocks versus want stocks. Now, as you can probably imagine, when people are buying their wants aggressively and the stocks of those companies are doing well, we would call that a risk on environment, where the XLY, which is the ETF that we're using for consumer discretionary, versus the XLP, which is consumer staples, is performing stronger for XLY, right? And then a risk off environment would be the opposite. Well, this supports as well the risk on narrative. So I like looking at this as a confluence tool. If you really like the Bitcoin to gold ratio, I'd also consider adding the XLY to XLP ratio or consumer discretionary versus consumer staple ratio to your watch list as well. It's a really cool tool. If you don't have a copy of the stock box and you're a stock market person, check it out on our website, a1trading.com/stockbox. And in case you're wondering how to spell or what the name of the tool is, it's A1 stock box, as you see up here. By the way, on my second channel, I did a whole video about all the stocks in my portfolio right now. If you want to check that out, we'll leave it linked in the top right hand of the screen right here. And today's video is sponsored by 8cap. If you've never traded with 8cap before, they're a brokerage that offers a huge list of different things that you can trade with, and they offer some of the most competitive spreads, commissions, etc. in the trading space. Not only are they a great broker, but they also offer some really cool perks to people who sign up and deposit certain amounts of money to their account. For example, you can actually get a free copy of the Edge Finder. They essentially purchase it on your behalf if you follow the instructions that I'm about to show you on the screen. First of all, head over to a1trading.com/8cap. That's a1trading.com/8cap, spelled the way you see it on the screen right now. Simply create a new account using the link on that page specifically and deposit the required amounts in order to get access to the Edge Finder for free and follow the steps from there. It's quite simple, but again, all you have to do is sign up using our link, make sure you deposit the correct amount at least, and then of course we will offer you the tool for free on behalf of 8cap purchasing it for you.
Yeah, so I'm keeping an eye on some of the USD pairs. Of course, we've just seen a lot of weakness recently. I've been a bit skeptical, haven't really been looking to trade the dollar until I see some momentum, some direction, because it have been a little bit stale. But with this recent breakout on pound, I do like what I see. We've had a very, very choppy sideways market. I was kind of waiting to see which way price will go. At one point, it looked like we might break lower. But the past few days, price has really pushed up very well, and we've seen a pretty decent break of the high. So it looks to me that this overall uptrend is still at play, and perhaps we could still see higher prices. So I am looking to see if I can get a retest of this prior high, which is around 1.36. Nice kind of brief pause there as well. A lot of momentum in the 4-hour chart. So this does interest me. Of course, keeping an eye on the dollar. That still looks like it's got room to fall as well. Of course, we just cleared the key support there too. So if these kind of play with each other, USD keeps falling, I expect pound USD to keep rising, then it's just up to the market if I can get a decent pullback. But I like the look of pound USD.
Yeah, pound dollar looks just incredible. Most of the dollar crosses moving pretty decisively here. Sounds like you're still on the bearish side as well. With the US dollar, myself included. I traded euro dollar, but now I'm kicking myself for getting out a little too early on this one. Took profits on this move. I caught like this candle right up to here and then just closed it with the idea of like if it doubles back, it comes back, I'll grab it again. But looks like I missed that breakout, but totally okay. Take them where you can. Pound dollar, like you said, looks really strong here. Just clear breakout through those highs, and Miko, this has been one of our picks this year. I feel like the last few months that we've talked about this, you and I are a little bit more on the swing trade side. So we typically will, I've noticed just from our conversations that we both will like find an idea and you'll kind of hover around that idea for a few weeks. Like if you're in the trade, obviously you're managing it, you're looking for exits. And if you're not, however, you're still kind of monitoring it and watching for a while. So sorry if you already said it, but did you take a trade on the pound dollar? Are you in a position?
No, I haven't been in the position for pound. Okay. I've been waiting to see what price did with the range, which way we broke out. So I've been waiting for that, and now we've had the break. Now I'm interested for some pullbacks.
Yep, looking for the pullbacks. Yeah, okay, yeah, that makes sense. What about the yen pairs, Mika? We've got dollar yen super choppy. I've been kind of, when it comes to dollar yen, I feel like I've just not had a very strong directional bias in a minute. But maybe some of the other yen pairs. We've got, pound yen coming down a little bit here. Pound yen broke out of this kind of long-term channel that we've been in. CAD yen seems to be trying to break out of this. What are your thoughts on yen crosses right now?
Yeah, yen's been a bit of a mixed bag. Some yen pairs have been trending, some have been a bit flat. I think as a whole, yen is on the weaker side of things. I've had a look at the yen basket a few times today, and the yen seems to be, as a whole, heading down. We've seen a bit of strength maybe the past 24 hours, but as a whole, heading down. But yeah, pound yen, relatively nice break to the upside. I would be bullish on a market like this. I do think we can push back to 200, which is some major resistance above us. Euro yen has been quite bullish, to be fair. That's probably been one of the clearer trends. We've just smashed through some major highs there as well. I'm wondering if this breakout really does mean business, because the next big target for Euro yen would be 175, which is where we had the massive sell-off last year. Possibly we could see price push there if yen does stay weak. Dollar yen, on the other hand, that's actually been falling. So a bit of a contradiction there. And of course, with USD and Euro being different, Euro being stronger, USD being weaker. But this has actually been falling, and I actually would be pretty bearish on dollar yen. I think we can make another move back into support. I'm still seeing lower highs as we move down. We had a very aggressive rejection earlier this week, and I would expect to see more downside. So a bit of a contradiction between yen pairs. I think the ones I like the most, like euro yen and pound yen, they look a little bit clearer to me. I like the momentum, and there's a lot of upside if we are going to see this trend continue. So I'm interested for some longs there.
Yeah, euro yen is just an absolute beast. That thing is just ripping higher here. Looks really, really clean. Definitely looking for that pullback as well. If I could get that, I'd be interested in potentially getting a position going there as well. And yeah, pound yen, similar concept to pound dollar. We've had some really nice breakouts here. Another one that's been pretty strong is Swiss yen. Do you ever trade Swiss yen?
Yeah, I do trade Swiss yen. Probably been a while since I've placed my last trade with it, but I do keep an eye. I mean, at the moment, I'm not so keen to trade this one because we just actually created some new all-time highs. So I'm kind of just seeing how price reacts here, whether maybe we start to pull back or is the trend going to continue. If yen is going to stay weak and Swiss, relatively strong, then of course we could still go higher. But I'd rather trade euro yen because there's still kind of a target for me to work with. Whereas Swiss yen, now that we've taken out the highs here, it's kind of like, okay, where's the next stop? I have no idea, but euro, I've got something to work with. So I'd rather focus there. But yeah, I do trade Swiss yen when there's opportunities, but it's been a while since I've touched the pair.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.